Good morning, this is Sakis Paraskevov, Senior Fundamental Analyst at IronFX, bringing you the morning comment for the 17th of August. Hawkish Fed talk boosts the dollar. After being weak for most of the European day yesterday, the dollar rallied despite disappointing CPI data for July, following some hawkish remarks from New York Fed President William Dudley. The Fed officials said that we are edging closer to the time to raise rates and that the markets are currently too complacent and underestimate the possibility of a rate hike as early as this September meeting. Later in the day, Atlanta Fed President Lockhart added to this hawkish rhetoric and said that at least one rate increase could be warranted this year, with 2 hikes being a possibility as well. Today markets will focus on the FOMC meeting minutes, with any hawkish tilt adding to the greenback's recent recovery. The FOMC will release the minutes from its July monetary policy meeting later in the day, where the committee remained on hold and noted that near-term risks to the economic outlook have diminished. That came as a surprise to many market participants, given that the Brexit vote was expected to delay the Fed's pace of normalization, something hinted by Chair Yellen at the June FOMC meeting press conference. In our view, the focus of the July meeting was on whether the Fed would keep the door open for a potential September hike despite the UK referendum outcome, and that has already been answered by the meeting statement. Nonetheless, the factors that led the committee to conclude that the near-term risks have diminished are likely to attract attention as market participants try to gauge the timing of the next Fed rate move. Following that, data have rather been mixed. Even though the labor market remained resilient, GDP growth was much weaker than anticipated in Q2, and retail sales disappointed in July, pushing back somewhat market expectations for the next rate hike. An account of an optimistic committee in the minutes could raise the likelihood for Fed funds rate increase this year and perhaps support the dollar. However, should the committee fail to signal its willingness for a rate move this year, investors who are looking for such hints will be disappointed, especially following Dudley's comments. This may cause the USD sell-off that started after the July NFP report to continue. As for today, during the European day, the UK's employment report for June is coming out. The forecast is for the unemployment rate to have remained steady at 4.9%, while average weekly earnings are expected to have accelerated slightly. Considering that these data are pre-referendum data and some of the July data are already out, we expect them to attract less attention than usual, as they may not reflect the current state of the labor market. As a result, the reaction in GBP may remain limited unless we have significant surprises. As for the speakers, St. Louis Fed President William Bullard speaks during the day. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX, wishing you solid trading.